This is episode 6 of the Bitcoin price report for November 1st, where we discuss the macro, the micro, fundamentals, and technical analysis with a focus on the Bitcoin price. Welcome to Fed Week, and let's see if there are any major takeaways from the Fed meeting. Today, Bitcoin was at 20,522. Up 6.3% for the week. We are still consolidating around the very firm support level at around 18,550. There is a little bit of weekly momentum going on. The CBBI.info index is at 9, still in the undervalued range. Our dollar cost average and limit order strategy portfolio positions remain unchanged and is up 0.8% from inception. Let's move on to the technicals of the markets. The S&P 500 is very close to some resistance around 3,900. Weekly momentum is up. I added the Dow chart this week, which has less tech companies and shows a greater rebound. It has a lot of consumer staples, utilities, and energy stocks leading the way, and it's nearing resistance at around 33,000. The Nasdaq QQQ is above support levels, but has been pretty weak. Weekly momentum still points up. The 10-year yield is at 4.059%. The weekly momentum is still increasing. Gold is at 1644 and is flat, and momentum is neutral. Oil is at 88 and weekly momentum points up. The dollar remains flat at 111.49, but the momentum is turning down. We have the pound at $1.14, the euro at $0.98. We have 147 yen to the dollar. So all these currencies are increasing versus the dollar this week. On a macro perspectives, let's talk about M2 money supply and liquidity this week. Money supply seems to be incredibly important for Bitcoin. Before, we used to talk about 4-year price cycles as the main driver for Bitcoin. But another thesis is that currency devaluation and money supply growth is what actually drives Bitcoin prices. This chart by Raoul Paul shows the correlation between money supply growth and Bitcoin prices. It's very eye-opening. Seems to be very, very correlated. So we've been showing the M2 money supply and liquidity numbers quite often with Max Anderson updates. The money supply can be determined using the Fed balance sheet, the Treasury general account, and the reverse repo balance. $100 billion of new liquidity was added to the economy. I'd encourage you to follow the Fed guy Joseph Wang and the Last Standing Bear to learn about money mechanics. Recently, the Treasury floated the idea that they could provide Treasury bond liquidity with buybacks and replacing them with shorter-term Treasury bills. This may have a similar effect to QE, but also may disrupt Fed monetary policy. Both Joseph Wang and the Last Standing Bear wrote about the potential benefits and risks of these actions. Whatever the case, it's something we should monitor because these actions could affect the money supply and liquidity in the economy. I'll have the links for Joseph Wang and the Last Standing Bear below. And that's it for this week. Please like and subscribe, and I'll see you next week.